So after slightly good news for the USA economy with the GDP release today and the unemployment claims a little bit lower than expected, as we can see also the pending home sales, very good data, very positive. This is what triggered pretty much the inefficiency we see here. If we go to the 15-minute chart, let's go to a clean one. If we go lower, we can see this is a very sustained move during the news release and post news release that pretty much touched the range that we had marked in previous levels or in previous videos. And after that, as you can see, we already have new all-time highs, multiple ones, as is been the trend since 2024 at least. Why is this going on? But first, let's check something that is the area we marked in previous videos, that is this red zone. Price pretty much was just dancing around, uh, manipulating. This area is pretty much a manipulation. We have this first touch in the resistance that was acting as a very strong resistance. We got this push to the upside that created a new all-time high, but in previous levels it was acting very strong as a limit for the bulls to push to new all-time highs, that as we can see is the case right now. But after this rejection, we pretty much just stay here. We have some pushes to the upside outside the range, the red range, but really nothing that really consolidates above. Like here we have a first sign that it might consolidate, but we go blasting again to the second zone that we have, that this is pretty much the accumulation that has two inefficiencies that will be here and here. That's why sometimes I like to use the 2 hour. You can see very clear the price action is very easy. So if we move to the 2 hour, you can see these wicks. Those are inefficiencies. Price left tons of orders and also tons of traders trapped. Tons of stop losses are here. So what institutions are doing is pushing the price to those levels so they can have liquidity and cheaper prices to follow the trend. They follow the trend because these are $1 trillion markets. So if someone is telling you that this can be manipulated, don't listen to them. Just stay with the facts. And as you can see, the price action is very clear. We stayed ranging in this area that was the red zone or the manipulation zone. I try to warn traders not to enter positions here because it was pretty much nobody's land. It was the middle of the possible next move. So the bearish move or sentiment was very complex, and it was very hard for us to get something to the downside. So this big first push happened during London. As you can see, this is Asia. We broke the manipulation area and we start consolidating above. That's huge and key. These three candles in the 2 hour, if we go to the 15-minute, we will be able to see the difference between past price action that never consolidated versus this one. So you can see these three touches are actually creating lower highs. So it's not really a consolidation that we consider. This is going to boost to the upside, and this is pretty new release, so we don't have any data yet that could push the price to the upside. It's just the macros that tell us gold is bullish, like US dollar is weak. And as you can see, we broke this previous high and we test the top of the resistance just to reject hard, but we never go below again our, it's just we could say something we don't use as a guide. It's just we are using these zones as um, just as visuals to know what zones are interesting. But as you can see, the efficiency of marking these your charts and having good knowledge of what's going on here, price immediately this candle tells you price doesn't have any more volume, or bears are very weak, and you have two very strong candles followed by another very weak bearish candle, and this push is the one that starts consolidating in the other area that is a huge resistance at this point. So this is this should be triggering something to you, and at this point you're seeing that volume is reducing. That's because we are near important data. Sorry, this is the London hot hour. This push pretty much is during the London pre-market for NYC, and here around these pre-candles, it's when we got the data processed, because we have the release around this red candle at 6:30. Then we have here the indecision, and positions start dumping the price, so they can buy lower because they know the price will continue up unless GDP was like something out of this world and unemployment was like very low. As you can see, it was only 1k difference. Prices was going to be bullish, so smart people was tracking where are all the orders, and as you can see here, it was an accumulation of hours during 2 sessions. So you can see clearly in London they were cooking something. They clearly nailed it, because here we create another inefficiency around this area. So we have this other area at 33 as key, and after that we pretty much just kept pushing to the upside until we break multiple all-time highs. Our previous all-time high was around here, so as you can see we now printed new all-time highs, and actually pre-market and post-market we already printed a new one at 77. So for now it's very likely that we will be visiting. There's some futures pages that say that 100 will be, or it's already a quoted price. So this is gold spot, so at least we are near but not yet there, but we can expect that 3000 will be 300,000. My English, but you know, that price, it's very likely that will be visited. And also try to not position yourself right now for, like, it's very easy to call it just as bullish, but what happens if you, for example, bought in 77? Right now price already dumped you 7 pips, sorry, $7 to the downside. So try to position yourself during data. At this point we don't have any much data this week, but next week we will have NFP, we have an unemployment, more ISM divided in 3 sessions. And this is very important day, Tuesday. We have manufacturing jobs opening and manufacturing prices that it's not very relevant as ISM services, and unemployment claims, for example. Also we have very hot day on Friday, so pretty much next week will be packed with news and whatever Trump is doing with the tariffs, blah blah blah. So expect April to be very hot, and try to not position yourself very big in this moment. So if you're going for shorts, try to keep them short. Like, don't stay too long in the market because you will get caught at one point. And as you can see, even if price is bullish, you're getting manipulated in very key areas. So for now, as I mentioned, we're in nobody's land, so we need for price to print more price action so we can at least keep track of it. If not, just play with the bulls. Bullish is the trend, but you need to keep an eye on the data. Possible recession is high, but also the GDP is also providing the expectations long term that the Fed need to start reducing the rates, and for the people to start having hope, because at the end, who suffers is the people in the USA or in the global economy, because a lot of economies are Mexican. We depend on whatever USA is doing. So we just need to stay alert, not create FOMO, and don't be scared of trading. We need to be making money because that's what we do. Traders trade, sellers sell. Okay, have a good one, Juice.